last week I took a few clean setups. They followed my rules and they worked. I made 24.78 RR. In this video, I'll show you how I found them, why I trusted them, and what you can learn from them, even if you are just starting out. On Monday, this last Monday, as you can see, price was bullish. I believe this was news. Anyway, we have here a higher high, higher low, higher high again, breaking a swing high structure. Then price was creating for our point of interest. First, let's talk about higher high, higher low, then break of structure of this week high. Leaving behind a valid demand with imbalance, price was creating a build-up of liquidity for us. As you can see, this took a day or 2 days maybe. Anyways, after the build-up, price mitigated our demand. This is considered as an inducement. Let's go to 1 minute. I will show you where I entered. Why didn't I hold up to this swing high? Because this high is weak. Because we are going like this, higher high, higher low, higher high. So the price is bullish. So this swing high is weak. This swing low is strong. Let's go to 1 minute. I will show you where I entered. After mitigation of the 15-minute demand, I entered the first trade here. Then I re-entered again for the scaling up. Anyways, let's talk about this. What happened here? Lower low, lower high, and then lower low. This one is not really a low because this one looks like a liquidity, right? Anyways, what happened here is price made a little bit of build up, then price went up, could not break any structure, then price went down again. So this one I consider a valid break of structure. As you can see, I was greedy. Instead of taking this high as profit, I would have secured like a 5.9 R. But I use my usual risk management. I partial at 3 R, then let the rest run up till like, let's say, for example, 10 R, maybe this high, something like that. Anyways, price was trickling down, like doing a lower low, lower high, lower low, lower high, then mitigation. Then price went up suddenly, breaking this recent high, recent 1 minute swing high. I knew price would come back to mitigate this demand because this demand boost the price up, left a lot of imbalance. So instead of targeting the swing high of 1 minute, I secured partials on at 3R. Then my target was this high. Anyways, the price had different balance. As you can see, it took me out. The only reason I could think of that price made come back and take me out at break even. Let me show you on 3 minutes. Let's refine the higher time frame POI to 3 minutes. Look here, this is the 15-minute higher time frame POI or point of interest. If we let's say we refine it to this candle, let's go and see if this candle is mitigated. So I can show you why the price took me out. As you can see, the price was planning to mitigate the whole zone. I was thinking the price already mitigated 50%, took liquidity, tricked many people. So I was thinking that price will not come back, but unfortunately, it took me out. I lost interest. But if I kept trying, I would have profit. I would have had much more profit, but I just let it go. Maybe around here. Ideally, this is not a good demand because it has no imbalance. Maybe on 1 minute it would have been like this. Break even also. It doesn't matter. Let's move on to the next stage. This is a Friday trade. As you can see, price was doing a higher high, higher low. Let me show you an example. This is a low, higher high, higher low, higher high, then higher low, a lower low, lower high, lower low. Price came back with impulse to mitigate this demand. I marked this demand on 30 minutes. This is your, let's say, new high. Then price was doing a lower low, breaking, let's say, breaking this swing low, this recent swing low. This is your lower high, then lower low. I marked this soon at first on this on 15 minutes. Then I said to myself, why not take the whole zone as a supply? That's exactly what I did before I entered this trade. Let's go to 1 minute. So I will show you this trade has no build-up of liquidity. As you can see, this is only a an order flow, or you can see following a 30-minute medication to 15 minutes. Let's go to 1 minute. I will show you my entry. As you can see, price is structure. Always structure is king. State C, lower low or lower high, higher low. I mean, higher high. Let's this demand boost the price to mitigate even deeper. The only reason that price makes deeper mitigation, if we refine this 15-minute zone, let me show you. For example, let's say like this, or maybe let me mark it like this so you can see the difference. As you can see, price mitigated the refined 15-minute point of interest or supply. This was the last candle or the last demand that boost price to the upside. So this one I took it as a break even. I mean as a break of structure. We have also here a build up, as you can see, build up of liquidity. We can consider this week that mitigated the demand as a inducement. Let me talk about how I picked this demand. Let's go to 3 minutes. Break of structure happened on 1 minute, but the best point of interest or best supply I could pick is on 3 minutes. As you can see, very clean. If I had picked it up on 1 minute, I would have missed this trade, this great trade. This yielded 10 point RR. Let's move on. Let me show you the other trees. But first, let's talk about of how this supply or this setup looks like, just like what I have in my backtesting journal. And here's the thing. Let me show you first. The price action almost seems like similar, but as you can see how I picked the zone, same thing like I picked it on during Asian. The zone was created or the supply was created during Asian session. And here is the thing: when you have seen the same pattern many times in your data, your brain starts to feel more confident. It's like imagine you walk to school the same way every day. You know which store to take, which street has the parking talk, and where the candy shop is. You don't feel lost, right? Trading is the same. If you have seen the setup over and over again, you stop feeling scared, you stop guessing. That's why I backtest not to find magic trades, but to train my brain to trust the setup. So when I see it again in the live market, I don't panic. I just follow my plan because I know it works over many trades. And here's the magic: this removes fear, greed, and hesitation. You stop thinking, what if it loses? And start thinking, I've seen this work dozens of times. I'm okay with the result. That's how you go from emotional, random trading to calm, confident execution. Even the entry looks like the same. Probably price did a deeper mitigation because there was a refined 1 minute supply. Anyways, let's continue to the next trade. I took an USD JPY. On Monday, I had this scenario. If this demand holds, let's say not on Monday, it was Wednesday. No, Thursday, yes. On Thursday, I had this scenario. If this demand holds, then we are probably mitigating this supply on 30 minutes or maybe this supply on 15 minutes. And as you can see, it was mitigated here. You can say almost mitigated or maybe it's extended a little bit. Yes, it was mitigated. Anyway, this trade I took was like a FOMO, fear of missing out. I was waiting the whole day to mitigate. Let's say before London Open, I forecasted that this demand would be mitigated. Price did mitigate it, but did not give me any increase up until here. This was FOMO, and I entered the trade on nowhere. As you can see, after NY Open, the price went down, then went up, mitigated the supply. Let me show you where I entered on 1 minute. After mitigation, I was waiting for this POI. Uh, let's see, after mitigation, I saw this break of structure. I was waiting for this POI price to come back to this point of interest. Let me mark it for you. Let's say this one. And I was expecting that this one would be smart money trap or maybe used for liquidity to mitigate the extreme, but price kept going up. As you can see, another breakout structure, another breakout structure. Then I decided that I don't want to miss this one. If you are mitigating this 15-minute supply, I risked it, and the price almost hit TP here, then went down, almost took me out break even, but I kept my cool. Then eventually TP hit. Anyways, price mitigated the supply, but my timing was already over. I trade from London Open to NY for let's say for 3 hours. Then I stopped trading for the day. Anyways, let's continue to the next trade, to the next setup. This time, this was 30 minutes, lower low, lower high, lower low, price broke structure. Price was making a liquidity or build up of liquidity for this zone. Let's start from here till here. As you can see, we have a trend line of liquidity: first touch, second touch, third, fourth, and third and fourth touch, then fifth break the trend line. This is inducement to mitigate the 30 minutes. I managed to catch a trade here after mitigation of this 30 minutes. Let me show you on 1 minute. After mitigation, the higher time frame, 30 minutes supply, we had here our first break of structure, change of character. I believe I booked this one on 3 minutes. Let me see. Yes, indeed, it was 3 minute point of interest. Anyways, I was targeting at least this low. Let's say this low, because this low had some kind of liquidity, a build up of liquidity. As you can see, very obvious liquidity. I would anyways, price had other plans, but I managed to secure a 3R on this trade. So my advice for you is always backtest. Always backtest. If you don't backtest, you will never feel confident. As you can see, all this point of interest looks similar to me. Let me show you. Do you see all the BOIs I bid looks similar? The only difference is if the BOI has built up. I don't mark it, but this one has a build up of liquidity of trend line. Let's say if we let me show you something like this. Do you see? It has built up of trend line like lower low, lower high, but very close candles, a lot of wicks. Then suddenly mitigates a point of interest. As you can see here, this is a demand. Then price flies off. When I look at my journal, all the point of interest I take look similar. They are engraved in my head like a picture I have seen 100 times. So when I see it live in the market, I just know what to do. No fear. It's just like learning to ride a bike. You don't think about which pedal to push. You just ride. Backtesting makes trading feel the same way. If you want to trade without fear and doubt, start by testing your setup 100 times and keep refining. 100 times only is not enough. You need to find your concepts, variables, and test different things. Or if you want to skip the guesswork, study my 100 read. I have done the work, so you can just ride the bike. DM me on Telegram to grab the limited spot ebook plus lifetime mentorship bonus. Thank you for watching.